Hi there, traders. This is Brad Gilbert with today's trading action. It's Tuesday, the 12th of March. All right, now this is probably one of the biggest sort of events of the recent times, and I'm talking about the US inflation numbers. Right, the actual day is pretty action-packed, but the inflation numbers will be the key to it. We've got the final inflation numbers out of Germany. Okay, usually pretty close to the mark. The UK employment numbers, definitely major focus on the rate and the change. Okay, so the consensus is 10,000, 3.8 expected. So no change in the unemployment rate, but we could see a move here. And actually combining the UK data with the US data could be where a significant move happens. So let me just clear the screen because this is the key event. Now, the number to watch here is the year-on-year inflation number, right? It's 3.1% expected. Trading Economics is forecast a slightly higher number. I'm sort of like, well, I guess I'm more hoping that it's a weaker number, right? Because that really will put the death knell on the Fed. They'll be looking to cut rates and sooner than later, and the market will be factoring in sooner rate cuts, well, much sooner than June or July, wherever they were sort of thinking initially, right? So that's the key numbers. Now, I'm having a lot of trouble with my Metastock at the moment, so I can't go through all the charts and what have you, but I can give you some of the numbers here, right? So the claimant count change, the unemployment rate, the range here for the UK unemployment rate is 3.8 to 3.9. The change forecast is 10,000. So just keep an eye on that. But just keep an eye on the average earnings, weekly earnings there as well, right? That could sort of come into play if it's somewhat weird. Now, the 3.1%, right? A very tight range here for the US CPI year on year, 3% to 3.1. Right, the previous number was 3.1. You know, this is what we want is, right? We can't sort of predict what the number is, or we can predict that. But what we want to do is look for where the best trading opportunity is. To me, it's the end of the dollar rise, and that's weaker numbers, right? So you've got the US core CPI numbers here as well, month on month and year on year. Just have a look at those. But it's just 3.1% to me, which will be the game changer. Right, that is it. A print under 3%, under the low here, will give us a immediate sort of dollar sell-off. You see equities rally aggressively, and that'll be it. It's a nice, easy trade, right? Now, a number, you've got to factor this in. If we do get a number that comes out as expected, right, it still means, don't forget, we're still got the backbone of the Fed, Jerome Powell, telling us that they are ready to cut rates. Right, it's getting closer to the level. So it's 3.1. We probably don't see the immediate sell-off, but still, I think the trend is sort of set, the downtrend. But below 3% is where the action will come from. Right, that's what you need to be focusing on. And I guess a spanner in the works will be a number like 3.2%. Right, I can't see it with the way the numbers have been dropping, but that would obviously send the dollar higher. A bit of a correction. It doesn't change what Jerome Powell was talking about as far as they're ready to cut rates, but it will mess the whole situation up. Weaker numbers, it goes with the trend, it goes with what the Fed's telling us, and that's where the money is, right? So look for a number under 3%. You get on that gravy train and you should be making some cash. Good luck, guys. Cheerio.